Hi everyone, thanks so much for joining our Nvidia special. We had some monster earnings last night. They were fantastic. Let's go straight to the charts as usual. I'm just going to show you my, that is actually the world bond market. Don't look at that, be looking at this one, which is world equity markets. Because as you can see, European stocks, if we just follow my cursor here, are an absolute sea of green. That comes even though there was some quite hawkish FOMC minutes. It suggests that Nvidia might even be more important than the Fed at this stage. So we've got a big, a bit of a big change of mood post those earnings last night. We're going to dive into why that was, but I do also just want to show you that we've got some big increases here now in the futures side of things. Futures are pointing to a much stronger open for US stocks, 1.3% gain for the S&P 500, getting us well above that 6,700 level. If we just look at the E-mini, so this is the future, so it's you can obviously trade on futures, and that gives you an indication of where the market will go once it is live. This is kind of like the pre-market trading, if you like. And as you can see, really important, look at the right-hand side of this chart, follow the cursor. It's the fact that we are higher on the day, but that we are testing that 50-day moving average, which comes in at 6,755. We're currently 6,743. Really close. So I feel like momentum is back on the upside after these results. And this you could almost all put down to Nvidia's results. Now, why is that? Let's just go straight in. Now, this looks like a very confusing amount of data, but it really isn't. Follow my cursor and I'll tell you how great these results were. Revenue, 57 billion, 57.0 billion or 006 billion. That 006 is actually worth quite a lot. That's a 62.5% increase on a year ago, much bigger than the 54 billion we were expecting. Gross profit, 41 billion, net income 32.37 billion, up 56% year on year. If you remember, that was expected to be about 31 billion mark. So just beating estimates across the board. Positive cash flow, a massive increase in free cash flow from 13 billion to over 22 billion, with expectations that it will continue to grow. Look at the expectations for next quarter, which is our current quarter now. So for Q4, they're expecting revenues of 63.65 billion. That's 61% increase from last year, massive increase from even this quarter. So a really fantastic set of results that really beat all analyst estimates. And I think we obviously have some visibility that revenues would be strong for next quarter and potentially into the first quarter of 2026 as well, because we know what those hyperscalers have already committed to spending CapEx. But I think what was really astounding, Jensen Huang is the Nvidia CEO. He was just so positive. He called it the virtuous AI cycle. Now, why is that important? We got so used to talking about Nvidia and about their 3 or 4 customers, Microsoft, Amazon, Meta, Alphabet is in there as well, because they are their biggest customers, absolutely. But he broadened this out. He said there were more sovereigns looking to buy Nvidia products, so that's GPUs and chips, and the most expensive chips, that there are more AI startups than ever, that you've got new cloud providers that are just moving in across every industry and pretty much nearly every business. So that is really positive. And when I say every business, obviously not necessarily the really small ones, but certainly the big ones. So, that's thousands and thousands of businesses worldwide are using Nvidia's chips, which is why they can produce revenues like they have, which is why they have cash flows like they have. Now, I just want to, obviously, as we led up to this earnings report, there was some real concern about the AI trade. Partly that was to do with valuations. Partly that was to do with people saying, oh, will they actually continue to have such great revenues? Will they actually be able to blow the socks off investors' estimates and what investors expect every single quarter? Well, the answer is yes. It does feel a little bit like we're defying gravity, but there's such a strong story. And that's what investors wanted. They wanted the story, and Jensen Huang gave them the story last night. He gave them a positive outlook. He gave them a positive story, and he gave them a really, this virtuous cycle of AI is very virtuous anyway for Nvidia's results. Now, there were concerns going into this that people were spending too much, that there wasn't enough money, and that, there'll be a lot of debt. Now, there still are those concerns, and I think that there will still be a lot of concerns. There'll be some lingering concerns, particularly around the amount of debt people like Oracle and Meta are spending to build out their AI infrastructure. But that money is certainly going somewhere. So if there is demand, And if Jensen Huang is able to say, well, you know what, we're not just reliant on the Metas and the Oracles and everyone else, we've got a broader array of customers now, then that's going to be really, really good. Just look at this company in terms of its cash and cash equivalents. It has a huge amount of cash on its balance sheet, way more than expected, 43 billion. That is a jump from 25 billion in 2024. So 2025 expected to see a massive increase. That's cash and cash equivalents, by the way. But what was really interesting, so that's Nvidia's. Nvidia has over 40 billion of cash and cash equivalents on its balance sheet. Let's look at Microsoft as well, because Microsoft is really important for Nvidia because it's its biggest customer. Lots of concern there that maybe that hyperscalers would have to scale back. But as you can see, now, yes, their cash and cash equivalents have fallen, but they built it back up in 2025 from 2024, and that is over 90 billion. So it's 94 billion. So Nvidia's biggest customer is also awash with cash and has more cash than Nvidia. So it can continue buying Nvidia chips. So that is a really just a positive outlook. I sent a note out and it's like, this is almost a perfect set of results. These are nearly perfect. In fact, there was very, very few weak parts of it. Some people had expected the forecast for revenues for next year to be in the 75 billion mark, but I think those people were outliers and they were probably a bit of the animal spirits that we just need to get rid of anyway. So overall, very, very strong results. Let's take a look at Nvidia's share price. Now, the share price is not live. Sorry, this is actually the Magnificent Seven. The share price is not live. Excuse me. Yet, because we haven't got US stocks that are open. But what we do have is the price from yesterday, and we had tested that 50-day moving average. We'd actually fallen below it, but there was great demand ahead of the earnings yesterday. That 50-day moving average comes in at 186.36, and we closed just above there at 186.50 yesterday. Now, in the pre-market, Nvidia's shares are up 4.8%. So not only are we going to shoot well above that 50-day moving average, but there's a chance that we will get above 200 today as well, $200 per share. That's a key psychological level, which would really signal that the AI trade is back on. And that we could actually see a rally into year end. Now, as I said, obviously Nvidia makes up 7% of the S&P 500. So when it has a 4.8% move, just technically that's going to push up the index, but it's also pushing up the overall ecosystem. We've seen gains for the likes of AMD, for CoreWeave, for those other big AI players. Likewise, in Europe, we've seen big gains for European tech, so the ASMLs and some of the other tech stocks there. And what we have seen, if we just go back to that world equity market screen, earlier today, we'd been up above 1% on the Euro Stoxx index. We've come back a little bit as we got to London lunchtime. But I think once the US comes in, then we could see another leg higher, particularly if that really does give a boost to overall stocks. And as I mentioned, we are expecting that the whole of the tech ecosystem will lead markets higher today. Now, let's go back to that Magnificent Seven chart, because as you can see, this has been normalized to show how all of the Magnificent Seven work together. I've also added Palantir in there. And it's a 6-month chart, so it goes all the way back to April. Obviously, we've seen a clear divergence in the last few weeks with Alphabet and Google leading the way higher. They've had a lot of good news, fantastic earnings. Also, they had, in comparison to Nvidia, actually, who have lost some investors like SoftBank, like Peter Thiel's macro fund as well. They've seen Warren Buffett come in and buy Google stock. This second best performer is actually Nvidia. And as you can see, it had turned higher, but it had quite a rough November, as you know, as we've spoken about a lot. So it's really turned now. But I expect Nvidia to play catch up now with Google, and there could be a bit of and we do expect some divergence in performance from the Magnificent Seven, with the likes of Meta, also Microsoft actually coming under pressure. So Meta is the blue line in this chart. As you can see, that's the weakest of the Magnificent Seven. Lots of concern there about what they're doing. They are using AI, yes, but I think the market isn't necessarily buying Mark Zuckerberg's story, which is he wants to create communities of AI bot friends for people. I think that's a less compelling story than boosting workplace productivity, which of course is Nvidia's bread and butter. So it's nothing to do with Nvidia or AI generally, but there are some pockets of weakness. And I think at the moment, the market is saying we don't really like what Mark Zuckerberg is saying, but I would still expect Meta shares to be lifted on the back of Nvidia results today. But I do think that we could see some underperformance in Meta. I think Microsoft has a much better chance of rallying into year end and actually outperforming. Tesla's a funny one because obviously Elon Musk, a lot of the sell-off you could probably date back not just to Palantir's results, but also to Elon Musk's $1 trillion payday, which obviously he has to earn and hasn't come yet. But that was just kind of a bit more animal spirits. Whereas what Nvidia's results have done, they have solidified the case for AI because it is growing. It's a huge theme. It is not a bubble yet. And I think those who are looking for a bubble, who are looking for a really negative sell-off, they just weren't looking at the fundamentals closely enough. And if you look at the fundamentals, they're still very, very strong. At some point, Nvidia probably won't boost revenues by over 60% year on year, but we were saying that last year and they've managed to do it again. So it just shows you how huge this build out. And yes, there are going to be concerns about it, but demand is still absolutely huge. And that's what Nvidia is telling us. And that has reignited and revitalized the AI trade. And we expect that to have a nice knock-on effect as we go through. Now, I did mention earlier, we did have Fed minutes last night. We've also got some key economic data coming out of the US because the government has reopened. That's coming out at the bottom of this hour, so in about 19 minutes. Let's take a look at that data first. We've got initial jobless claims. That's for November 15th. So that's actually for the week before last, 227K. We're going to be looking to see, that's obviously the level that analysts think it will be. If it's obviously below there, well above there for initial jobless claims, then that could lead to more fears about holes in the labour market and a slowdown. But we also have the September payrolls report, 51,000 jobs expected to be created, up from 22,000 in August. Private sector payrolls, 65K. And the unemployment rate is expected to remain steady at 4.3%. Now, this is September data. It's obviously come out late, and it's come out in it's yesterday's news, right? But it still gives us a bit of a benchmark, a bit of an anchoring about where the US labour market is, how it's doing, what's it, where are we, what kind of benchmark are we at? If we get a number bigger than this, I think it will dramatically reduce further expectations of a December rate cut because the November payrolls report now will not come out until after the December Fed meeting. So the December rate decision will be decided, and then on the 16th of December, we get the next payrolls report for November. So that's just something to watch. Now, last night we had slightly hawkish minutes where multiple Fed members sounded very worried about inflation and rode back from a December rate cut, which is why now there is only a 25% chance of a cut. Now, if we just go back to that, to this data page, if you just follow my cursor there, that 51K expected increase in payrolls. If we were to get a negative print for payrolls for September, I think you will see a big rapid repricing in interest rate expectations. Funnily enough, the markets are still quite in very buoyant mood because of Nvidia's results. They're kind of ignoring what the Fed are doing because the data is so weird and late and delayed and old that they are focusing on what is real. And Nvidia's results are real. They've been, announced now. So that big hurdle to the AI trade, to the economy, outlook for the economy is passed, and it passed with flying colours, because essentially you could argue that the global economy must be in a decent enough shape if Nvidia is able to rake in all of these earnings, and if even the hyperscalers are willing to invest that, they must think that they can do it. So maybe the economy is in better shape than we think. That's certainly what the Fed thinks. That's certainly what interest rates are pricing. We're going to have to see if that's what the Fed is doing. But the equity market seems to be ignoring the Fed right now, concentrating on Nvidia, which really suggests that Nvidia is actually beating the Fed in terms of, who is the biggest market driver right now. So I am going to leave it there, guys. But thank you so much for joining, and we will chat again next time.